Good evening, Ira Epstein, and here we are with your SPDR ETF market wrap-up. And this wrap-up is for the evening of Wednesday, the 12th of April, 2023. Sorry I didn't make it the past couple of nights. I wanted to. At the end of April, let me say it right. At the end of March, beginning of April, I started battery every year. I do physical tests. As you get older, you do this, and I'm in pretty darn good shape. But you go through them, and it puts you through a lot of things. My worst problem is I'm so fair that the sun gets me, and I got to watch out for skin cancer, which I seem to get every year no matter what I do. And then they cut it out of you. It's what we have on the forehead here. And then it's the other battery, the eye exams and so on. Then yesterday, I shot every one of the videos. And what if I tell you I shot them, finished, and the voice didn't take? By the time we had finished, because I was at an eye doctor and I couldn't see until 6-something at night, reasonably at least, you know how they dilate your eye, I didn't want to redo it. So I'm back, we're fine, and let's go with here. The CPI numbers came out today, and from my perspective, there's nothing there to stop the Fed from going another quarter-point hike. Now, I just looked up. The next meeting after that's the June, I think, 14th meeting. They could stop there. It depends what the numbers come in at. If you get numbers that come in, let's say, very strong on jobs still, and they don't start showing unemployment going up, you got a problem, all right? Because with strong labor, super strong labor, and that's what I want to call this. We have 3.5% unemployment. That's super strong labor. How do you beat inflation? You'll get bouts where, like we just saw in the CPI, some food fell, gasoline fell. Okay, but have you looked at gasoline prices recently? For those of you that, by the way, are subscribers, in my morning subscriber video, I added the gasoline fund today, so we'll cover that in the morning as well. My futures traders, I know they're jumping up and down because I had done that report on February 6th. I waited for an entry point. It came Sunday night. So they know the result of that, and we've been very happy campers. But what about here? Well, one of the things I like to do is back away from markets in front of major reports, get the position small, and then build them again, and then play the game. And I think that proves to be the smartest thing. The question is, what's the naysayers going to do with this? Are they going to buy again? Don't know. We saw that the airlines are starting to put out some numbers that don't sound so good. It started with Delta, problems there. I'm watching Tesla, a problem. I'm watching Apple. Apple on my type of charting signal, until it takes out the high of this week, it looks to me like it's ready to come down a bit more. We saw that they had trouble with PC sales, and it's starting to set in. One of the things that we saw in the news, and it took over the markets for the past 2 days, was CarMax. So I said, what the heck? We haven't covered that. Let's do it. And what this market had done, very simply, is there's a gap in the chart that it's trying to fill. You had one back here, it didn't get filled, and you have this one. If it fails, that's a very powerful signal. If it fills it, nah, not so strong. Market had a great fourth quarter. We're now going to see next quarters and so on coming in, but that's basically what went on. When I look at the chart, higher lows, higher highs, bullish. Look for the resistance at the 200-day average. The market has been over since the end of March, if you will, the 18-day average. So the bias was up. It went up, fought a battle at the 100-day average for a day, and then just got that piece of news exploded. Now what was resistance coming back in at 66.12, I'm looking for some support in there. In terms of the Bollinger Band, it got over it on that spike it had that one day, and it's right back under it today. And in terms of momentum, you have an overbought market. Maybe that was a flash in the pan. We'll take another look soon. In Schlumberger, the pattern hasn't really ended. It's still higher lows, higher highs. Off the OPEC announcement, when they announced they were doing the massive amount of cuts, you had that one spike to the 100-day average in the Bollinger Band, and you backed off. Now, if you've taken my enhanced Bollinger Band course, this is your dream. You understood exactly what happened. The other guys around you are all buying up there. You aren't. If you were in the market, you're taking some money off the table or all of it, and you're waiting to see, do you embed? Do you stay overbought? And that's what you have. You have an overbought market. Do I think overbought conditions attract new buying. I don't. They either embed or they correct on the way down. You get a lower price. UGA, the gasoline fund. You can see how bullish I am. Just look at the embedded reading here. I've been keeping it here. I wanted to put it, and I should have done this on the morning subscriber video too. They have so many more than you do. They get so many of the oil funds and everything. They're all through there. And that's where we'll keep it. And I added this back to it today. This market still looks to me bullish. Sure, you'll get corrections along the way. But, you know, gasoline stockpiles in the U.S. are sitting at, 2012 lows? And you're just entering the driving season? People have money in their pocket? Airfares are through the roof. I just booked myself and my wife, one of our really close, I went to high school, grammar school with this friend of mine, phenomenal person. So we just booked to go visit him in Boca. And to make a long story short, I was shocked at how much the airfares were. We're going economy, and there's each of us was over $700 from Chicago round trip. I think that's pretty darn expensive. When I had my home in Florida, I used to pay round trip $200, and I'd go almost, honest to God, almost every other week down there from Chicago because it didn't matter. At $700, it matters, okay? I think that's expensive. In Tesla, you've got lower highs, lower lows. I'm looking now for a challenge here. What would throw me off and get me away from that thinking is if the highs of today are taken out on Thursday or Friday. If you've taken my outside day down charting course, you understand what I mean by that. If not, well, you should. And before we get any further, I want to remind everybody that tomorrow at 12:15 p.m., is my What's Up webinar. It is free to you. How do you get it? You move your cursor up here, you give this a click, an icon will appear. If you're on my mailing list, you've already had it. There are no more mailings going out. They're through. The people that are in it will be there. We're going to have a ball. It is fast-paced. I open it at 12:15 for you to get in and get adjusted to everything. You'll hear me talk a little bit to you. And at 12:30, the course begins. And the webinar begins. It's 20 minutes long. I don't have one of those timers, but I'm looking at the clock. I end no more than about that time. Why? Because at that hour, you have things to do. I have things to do. It's meant to be fast-paced. I can end it earlier if I don't get a lot of questions. That's yet to happen. If you register, do me a favor, by the way. You will get from us an email when you do the registration. There'll be a link in there. If you have questions on ETFs, SPDR, stocks, write them to me. Give me the opportunity to create the charts. That way I can have them ready to go. I have all the futures charts. I don't have every stock and ETF. How could anyone possibly? There's thousands upon thousands of them. And I like to put on, if I can, the window envelopes and the other studies. I can create them on the fly without all those studies, but I like to get everything for you. So I'm hoping to see you. That's tomorrow. If you have questions, call my staff, 866-973-2077. And you won't hear about that for a little bit. Okay, then we're going to go to the financial services. Now, this has had a heck of a run, and it got a lot of play on CNBC and Bloomberg the past few days because people were saying, you know, you're going to see the financial services will go up many months before the recession ends. They're already talking the recession ending. I didn't know that we were saying we're formally in one. All I can see on this chart is you've had an uptrend. The market's overbought. It finally went to the upper Bollinger Band, and if you've taken my course, you rang the bell. In XLI, higher lows, higher highs. Trend up, bias up. First resistance point is the 100-day average, and I have a theory on that. When you first get to that average, it's not uncommon for the market to fight at that. So it did. It cleared it, went to the Bollinger Band. Bingo, ring the bell. Market comes down and it's fighting at that number again. But the trend is up, and until the market gets under 97.34, I do think that the pros will be buying this market in the 98.50s, seeing if the market will hold up. Stocks, I'm not friendly. The semiconductors have had an uptrend that keeps failing at the 18-day average. So you've got the swing line up, the bias down. That isn't the place to be. You knew, and I've talked about how well I think home builders can do in this type of market. Why? Number one, there aren't enough homes out there. Number two, they're not going out and building a tract worth of houses. They're going to put up a house or two. They're going to show you what you can get. You'll decide if you want it. They'll do the custom building with you, and away you go. Will that work for the big boys? That's what they do. Why not? It's for the smaller ones too. So what the market has done is it's just now meandering back and forth, sideways, not falling apart. It has a bullish bias, but it's more sideways action than anything. On the energy sector, well, this is an OPEC move. They created this. Now the question is, will the U.S. join in? At what number do the Permian Basin boys say, yeah, I want to produce more oil? How easily can they do it? What amount of money will they spend? Because they have been, as you know, giving dividends, stock buybacks. The last thing they've been doing is investing heavy, and they're not about to, even at this price, heavy into new wells and the like. So if they were spending 30% for new wells, they'll do maybe 40% in a market like this. But if you're looking, they're just going to turn it on and flood the market, nonsense, not going to happen. They got caught in that once. They learned the lesson, just like home builders. You're wondering, how could they come back up here? They learned their lessons. The gold market, everybody's in gold. I always get nervous when I see a crowded trade. A crowded trade means I don't hear anybody talking the other side of gold. I'm going to talk it. You've got a Bollinger Band. You have a resistance point. You're overbought. The trend is up. However, it either embeds or it corrects more. One of the two is going to happen. And since it hasn't embedded, I just simply am going to wait on it. The area that I've been super bullish on and caught part of it, knock on wood, in my futures was here. The embedded reading on this. And this is the market that's gone up. And yes, I certainly cover this in all the gold, in the silver miners, in SLV, GDX, the Canadian gold miners. I cover all these in my morning subscriber videos. Then in copper, I've been the super bull in copper. You know that. I've talked about it. But the copper futures aren't what's moving. It's this. And I say this each time I'm doing this. This has been the powerhouse. It's fully embedded. I think the pros today took some money off the table, but I think they kept half their position. And I think they're ready to buy more. And here's what also, you got a bullish crossover. The 18 went over the 100-day average. You made a new high on the move, so it's hit my goal. And I would never tell a trader to buy the upper Bollinger Band. I would tell them to take money off against it. But on pullbacks, as long as you have the embedded reading, I think you'll see fresh buying. In TLT, bearish action today. Yeah, there was a battleground all day long, but you have an outside day down. If today's high is taken out, then you create what's called a bear trap. And the idea would be that the market could go back to the upper Bollinger Band, got that, before it makes a new low under this, all right? That's what you'd be looking at. If you take out today's high, that's the trap. If you don't, then you're looking to see, can you get back down and fight your battle, 106.28 to 22. It's an ugly chart, not an easy one to trade off of. In the dollar index, need I say how bearish I am the dollar? I did the special report for everybody on it in terms of the video report, showed you how bearish I am on UUP, the futures. I am now looking for the market to give the opportunity. It's like sitting there ready to pounce the way gasoline was. I waited from February 6th and finally caught the move. By the way, it doesn't mean I was going to win. I could have entered Sunday night and been so wrong, the market. And that happens. There is no trader that doesn't get wrong. If you think that guy exists, latch on to him, you'll be in trouble. There is nobody. Everybody gets wrong at different points. And I got fortunate, caught a trade, okay. I haven't been able to catch this one yet, bull or bear. I'm waiting for the setup, but I think it's going to end up with the dollar in a long-term downtrend. In the euro, it's a long-term uptrend. I think it's going substantially higher from here off this chart, but I don't think you buy a Bollinger Band in an overbought condition. I'm waiting for everything to come together. So that's basically where I'm at. I hope you join me tomorrow in the live webinar that we have. I'll open it at 12:15 p.m. Central Time. Remember, just move your cursor up there. I'm Ira Epstein. Have a great day.